Welcome to Drill Down Earnings. We have quarterly results from F5, that Seattle technology giant. This is the business story behind one stock on the move. I'm Epistrophy Capital Research Chief Market Strategist Cory Johnson with these F5 earnings. These are Q4 earnings, fiscal Q4 earnings, and they were good. They were better than Wall Street expected at $747 billion in revenues, $3.67 per share. Maybe just as importantly, and the market sure liked these results, the company announced a $1 billion buyback on top of the buyback that they're doing right now. They did about $100 million last quarter. $1 billion is, it's a $14 billion company, so it's a ton of stock these guys are buying back, confident in that free cash flow. Let's dig into the numbers a little bit here. So as I mentioned, $747 million in revenue. That's a 6% increase from the previous year. And software in particular in their report was up 19%. But 6%, pretty good for this company that had been growing more slowly. A pretty nice quarter for these guys. And indeed kind of locking in there with their guidance going forward at about 4 or 5% in future quarters. So maybe not as bullish as this quarter was, but maybe they're going to underpromise and over-deliver again. Look, operating margins are great now. 26% operating margins, fantastic for this business that has really shifted from a licensed software and hardware business to a services business, which is much more predictable revenue, and the software business, again, growing really nicely, now 25% of their business. You can see the gradual diversification we've gotten over time here, where systems is getting kind of bigger and bigger and services just booming at this company. In particular, if you look at their old business of licensed software, going back 10 years or so, they've really squeezed that out of the business. This is a subscription-based business right now, again, lending to a great deal of predictability as they've added more security into their businesses, as well as, again, more predictability in the way that they sell the business. Now, their system sales, not so much a benefit here, down 16% on a year-over-year basis, but 3% growth year-over-year for software. And as I mentioned, the perpetual license business, steadily shrinking. They've had some okay quarters with it, but over time, you're going to see that continue to decline, down 4% this quarter. But the positive guidance, the huge buyback, and the bullish tones from the company sent the stock flying in after hours, trading up 10% in after hours. That's after already rising 46% in the previous year. When we heard from the CEO, François Locoh-Donou, talk about where growth is coming from, they really see, shocker, big opportunity in the world of AI. And they see that they are moving into this AI with the partner that everyone wants them to have, which is NVIDIA. It's early days with NVIDIA, but they're very hopeful for what this is going to give us in the near future. Here's the CEO.
Now, I want to be clear that we are early days. We have a validated technical architecture with NVIDIA. We're starting to get interest from the folks we speak to who are building these factories and who see a significant opportunity to improve the efficiency and the utilization in their factories. But there's a number of questions around the go-to-market model that we have not yet answered. And so we also see that opportunity as materializing more in FY26 and beyond. But that said, it could be a pretty significant opportunity for F5, assuming that the go-to-market model works and that we find a way to embed this software technology on a large number of NVIDIA DPUs over time.
And that was François Locoh-Donou talking about kind of where they see themselves going, building these big AI factories for delivering applications of all kinds around the world, as well as doing that in a secure basis with a steady and predictable revenue growth rate. Interesting results from F5. All right, what's our big drill down earnings takeaway? The one number that tells us a whole lot? Yeah, I've got that. So Q4 earnings from F5, the essential summary is that the revenues are good at $747 million, up 6% on a year-over-year basis. Again, a nice improvement from a downturn we saw from this business in the last few quarters, but really seems to have turned around. 26% operating margins, maybe that's your big takeaway. This is a profitable business. They're going to put that money to work, buying back $1 billion worth of stock. Very strong quarter from F5. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.